Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Thanks for joining us. We're going to give it about another minute, let everyone log in. Today, we are going to do a deep dive into our bank statement program. It's our most popular program, and it's the fastest growing segment of the workforce out there. Everything we're going to do today is driven from our really easy to navigate website, and this is going to be recorded. We will get this out to you before end of day tomorrow, and any questions that we don't answer through the queue here, we will have your account executive reach out to you directly and answer those questions. So I'll introduce our subject matter experts here in about a minute, and we'll get started. So hope everyone's having a great July. Everyone enjoyed their 4th, and rest of the summer's here. So give it another 30 seconds and let people log in. All right. Again, this is going to be recorded, and we will we'll start slowing down a little bit of the people logging in. Okay. Again, my name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. I am honored to have our two subject matter experts who are actually out of the state of Florida. Stacy, please introduce yourself.
Hi, everybody. Thank you so much for joining us and learning more about our bank statement program. I have been with Angel Oak since the end of 2013 and excited to be here and help you guys grow your business with our famous bank statement program.
And then also in Florida, Steve Arnold. Steve, please introduce yourself.
Good afternoon, everybody. Steve Arnold, Palm Beach, Florida. 11 years with Angel Oak, and delighted to have y'all with us.
So between the three of us, we have over 30 years with Angel Oak. So that's awesome. So before we get started on our bank statement, we're going to do a quick poll here. And the question we're going to ask is, who has originated a bank statement loan in the last 12 months? So while everyone's doing that, I do want to share some stats. You know, since 2020, there have been 20 million new businesses formed in the U.S. And I'll speak for the Florida group here. 13% of those have been in the state of Florida, 12% in the state of California, and 11% here in the state of Texas. So let's see what the results of the poll are. Okay, 73% have not originated a bank statement loan in the last 12 months, and that's why you're here. We're going to show you how easy it is to originate a bank statement loan. And for those who participated, thank you for your participation in that poll. And the 23%, hopefully you've closed those with Angel Oak. So Stacy, like I mentioned earlier, everything we're going to do here is from our website. So let's talk about the bank statement program overview.
Sure. So our website, just so you guys know, is Angel Oak MS. It stands for mortgagesolutions.com. And what John's showing you is a little bit of, it's called the mortgage programs in the top right side of the screen. And that gives you an overview of all of our programs, just little snippets enough to be dangerous. So we're going to dive down deep into the bank statement program. These loans are for self-employed borrowers. These are people that have been self-employed or 1099 for the last 2 years, and now we've added a 1-year self-employment, which I'll go into in a little bit. We start at a $150,000 minimum loan amount, and we go up to $3 million loan amounts on these. These are done as purchases, cash out refis, rate and term refis. These are done on owner-occ, non-owner-occ, second homes, 1 to 4 units, townhouses, condos, non-warrantable condos. So you on this call that are from Florida, you know that we have a lot of non-warrantable condos here in Florida. So we do allow those on all of our programs, actually. So our bank statement program, we're going to use the deposits going into your bank account for the last 12 or 24 months. So you can provide your AE with the last 12 or 24 months of personal or business bank statements. we're going to average the deposits going into that account as your income. So we're not looking at tax returns. We're not looking at all their write-offs. We're averaging the deposits going into their bank account. I don't care what's going out of their bank account. We're just looking at what's coming in. We're going to average those deposits, and that is going to be the income that we're going to have to work with. So now you know what buying power, what price range your borrower can start shopping in. The good thing with us is we're going to do this up front for you. We're going to calculate that income even on a TBD property.
Yeah.
You're going to send us, we're going to show you later in this webinar how to use our quick quote and how to submit a pre-qual to us. So we will do the calculation up front for you, so you know exactly what income that underwriter is going to use. They're not going to recalculate it once you submit the file. So Steve and I are basically pre-underwriting your file before it even goes to underwriting. So that income calculation portion is out of the way. We'll do, like I said, 12 or 24 months, and you can provide 24, and if 12 is better, we'll use the 12-month average instead. And the only time it affects your rate is going to be if you're at 85 or 90%, then you do get a slightly better rate if you use the 24 months versus the 12. But if you're at 80% LTV or less, there's no difference in the rate, whether you use 12 or 24. It's just wherever the person gets the most money. Maybe they just started their business 24 months ago. Your first year, you're usually ramping up, so it might be a little sketchy as far as deposits go. So it might just be the last 12 months where the bulk of their deposits are coming in at.
Yeah, Stacy, I think that's huge. And, a lot of the deals we get, maybe not as much as we used to, but a lot of the deals we get, someone wrote a pre-qual letter, right? And all of a sudden they get their tax returns. Oh my God, they don't qualify for that home. And, then they got to, what's my alternative? It's to go to Angel Oak and use bank statements. But if you know that you are going to meet with a self-employed borrower, yeah, grab their tax returns, but why not get those bank statements up front, right? This is kind of like a public service announcement. Get those bank statements and go down those parallel paths, right? And then no one's hair's on fire at, contracts 3 weeks in and you just got their tax return. So if you know you're going to meet with a self-employed borrower, get their bank statements.
Yeah, like John said, look at their tax returns. They might only qualify after all their write-offs for a $300,000 home, but then you send your bank statements to Angel Oak, we calculate it, and now they qualify for a $600,000, $700,000, $800,000 home because we don't have all those write-offs on the bank statements. Now we do use an expense ratio, so we do have to understand that the business does have expenses that they have to pay. So we're going to default to a 50% expense ratio, meaning we're going to take 50% off of their total deposits and use that as the income. If that works, we're going to run with it. If you need more income, we can go down to as low as a 15% expense ratio, meaning we can use up to 85% of the deposits with a CPA or tax preparer expense ratio letter. And somebody that would be like a 15% expense ratio is going to be somebody that's 1099, a realtor, somebody that works from home, just does everything via the internet. Maybe it's social influencers. We're seeing a lot of those nowadays ever since COVID. I'm doing a lot of loans for social media influencers. Unless they have to buy product or anything like that, we can do as little as a 15% expense ratio if we need to. Now, with that said, we can also give them more buying power if they have a spouse that has a W-2 job, or maybe they have a second job that is their W-2 job. We can use a W-2 or maybe fixed income, Social Security, child support, alimony. We can use all of those additional incomes as more income to give them to qualify. So again, we're going to give them more buying power to buy that bigger home when we can add in all of their fixed income, or like I said, a spouse's W-2 income. We want to see W-2s and pay stubs, never want to see tax returns though on the bank statement program.
Yeah, Stace, the beauty of that is, like you mentioned earlier, this is all done up front at the prequel, right? Like you mentioned, I really want to reiterate what you told us was we'll do that on a TBD. That's the great thing about Steve, Stacy, and all of our account executives across the country will do that. So Steve, we said this was going to be a deep dive into bank statements. Talk a little bit, your 11 plus years here. Talk about your experience. What do you want to see on a 1003 and really what you're looking for in a credit report?
So on the 1003, the more info, the better. Completely fill it out as best you can. One note is on the income section, leave that income section totally blank. If you have to fill it in due to your LOS system, then you put $1. But we ask to leave that blank because we need to calculate income for you, and we'll provide that to you. But really important on the dates of the company, so we know for sure if it's under 2 years. If it's under 2 years, then we definitely want to see the previous employment listed so we can ensure that they have at least a 2-year history and experience in that industry. Also, make sure on the section 1, the company information for the self-employment, that company name has to match the name listed on the business bank account statements. You can't just list owner or sole proprietor, whatever it is. List the name of the business because it has to match the name reflected on the actual account for the statements. If there's gifts involved, housing, if they're renting, please list the rent. Otherwise, we wouldn't be able to do our jobs properly and figure out housing, payment shock, etc. So there's a lot of intricate and significant parts on there that we do our job in getting you an accurate quick call. So just fill it out as best you can. If there's any questions or concerns, then you reach out to us or the AE prior to it, which is fine.
Yeah. So Steve, talk about maybe trade lines, please, too, also.
Sure. So trade lines, it's very easy, and we combine them. If it's a husband and wife, a spouse involved, we'll combine them. You have to have, we ask for either 2 at 24 months depth or 3 for 12 months. They can be closed as long as they were active in the last year. We even count housing history. If somebody's renting and they can prove rent and they only have one auto for 24 months, but they've been renting for 24, I can also count the provable housing as a trade line as well.
Yeah, thanks, Steve. So we already have some questions coming in here. Stace, I'll throw this one out to you because you mentioned the 1 year, and William's asking, can you use 12 months of bank statements if they've only been self-employed for 8 months, still averaging over the 12? So you're not gonna like our answer, William, but go ahead, Stace.
So, William, that is a great question. We actually will go down to them being self-employed for 1 year. That's going to be the minimum. Now, when they are self-employed for 1 year, we'll use the 12 months of bank statements. Now, if you want to get the process started, like at 10 months, they've owned the company for 10 months, we can at least start the process, look at the credit report, make sure that they credit qualify and everything like that for you. But once they have that 12 month of being self-employed, as long as they've been in the same line of work for 2 years, meaning if they were a W-2 roofer with a roofing company, and then they started their own business on the side, or they broke away and started their own business 12 months ago. So I have the 1 year self-employment, but they've been in the same line of work for 2 years. That's good. Now, on the flip side, if they were doing roofing work on the side and filing a Schedule C on that, maybe they didn't incorporate themselves, but they were filing a Schedule C, and we can get a letter from their CPA stating that they've been a self-employed roofer for the 2 years, then we can also do it that way. So kind of tricks of the trade. Definitely want to get with your AE on that and explain, what do they do for a living? How long have they been doing it? Have they been doing it on the side, filing a Schedule C that you can maybe get a CPA letter to verify that?
Yes, Stacy, and it's like what Steve said, on the 1003, the more information you can put on there obviously helps you pre-qual it quicker, and you get that borrower basically off the street. But another great example, Stace, we have other account executives, like you use the roofing example. What about a doctor? Maybe that doctor's just still doing rounds at the hospital and opens up their side clinic. But I think that's really, we talk, the stats we just shared about self-employment has skyrocketed over the last 4 years. So it just makes you start to think about different ways to go after different segments of the industry to grow your business. Steve, Charles is asking here, if there are two owners of the business and you're using business bank statements, do you divide that income then by two?
So the borrower must be a minimum of 50% owner of said company to qualify. If you are going to try to utilize personal bank statements, it must be a minimum of a 25% ownership of the business.
Yeah. But Steve, his question is like, if let's say you have two owners that are 50%, we're not going to allow them to use 100% of the income, the deposits.
You're saying if both owners are not the borrowers on the loan?
No. So we have one borrower, he's 50 or she's 50% owner of the business, and the other
50% of the deposits less the expense ratio, et cetera. So we'll cut down that. If he owns 70%, we'll use 70% of those gross deposits less expense.
Thank you. Appreciate that. So Larry's asking, Stace, I'll ask this to you. Not sure what you mean by a 50% default expense factor. Can you kind of clarify? You've mentioned it, but just clarify for Larry a little bit the use of that default, I guess, of the 50%.
Yeah, so we do have to accommodate for there being expenses in the business. So you have your gross deposits going into your bank account. We know that there's business expenses being paid out of or through that business account. So we have to accommodate to know that we have to use an expense ratio, meaning we have to assume that they're paying business expenses out of that account. So we have to account for that. So we're going to default to a 50% expense ratio, meaning we're gonna just default, meaning we're just gonna use 50% expense ratio out the gate. And if our DTI works using that 50%, then we don't have to get any sort of expense ratio. We're just gonna use it and run with it. If it makes the loan work, we're gonna use it. If we need to use more deposits, our DTI is too high. So we need to use more of those deposits than the 50%. That's when we'll get an expense ratio letter from a CPA or a tax preparer, and it'll say Shirley's ABC house cleaning company's expense ratio is 30%. So if he says it's 30%, now I can use 70% of the deposits instead of 50%. So therefore I'm using more income to help with that DTI. Does that help answer that question?
Yeah, definitely, Stace. And then Stuart's asking, I'll go on top of that, Stace, for you. Does that tax preparer need to be licensed?
So it doesn't yet. It's got to be a licensed tax preparer or CPA. It doesn't have to be a full-on CPA. It can be a tax preparer, but yes, they do need to be licensed.
Yeah. So Steve, Bill's asking here, what if their business income is deposited, and you started talking about personal bank statements. So maybe dive a little deeper into why someone would use personal bank statements.
Sure. So a couple of examples. Realtors, I think all realtors are 1099 contractors, so they can utilize multiple programs. We have a 1099 program, but also if they're using a personal bank statement for say a realtor, that's one thing. But also if a business owner has a personal checking and the business checking, if we decide we want to try the route of the personal bank account statements used, we can give them credit for 100% of that gross deposit, no expense ratio needed, as long as you can provide a couple statements of the business account to actually prove that they legitimately have a business account. So that's a strong, real strong program. And you utilize that if the business actually transfers and pays the owner to his personal account, that's when you would use that.
Yeah, and I just want everyone here to know that that's what working up front with your seasoned account executives are really, they're we always talk about it. Your account executive's like your confessional booth, right? Let's let them take you down the right path for both you and your borrower. So here's another, Stacy, here's a great question from Scott. He's asking if both the borrower and co-borrower on the loan, whose credit score will you use?
That's a really good question. So typically on our programs, we use the primary wage earner's mid score. So if they own 50-50 of the company together, we're using a business and they both own 50%, I'm going to use the lower of the two mid scores. Now, if we have a articles of organization or operating agreement or even a tax preparer letter saying Joe Schmo owns 70%, where Lisa Schmo owns 30%, I'm going to use Joe's mid score because he's got a bigger percentage of the business. So he's technically the primary wage earner. Yeah. Now on another, I'm actually doing this loan right now. We had two borrowers, they own 50-50. Her score was a 660. His score was a 780. Huge difference in rate. Come to find out they're 50-50. So I was stuck using the 660 score. Come to find out he has Social Security income. So I was able to add the Social Security income to his side of the 1003. Now he's my primary wage earner. I can use that 780 mid score and the rate went down by 1.5 points or almost 2 points.
That's why they're on this webinar and everyone's learning from that. That's awesome. And it's Mary's asking, do you pull the credit or do we?
So you will upload the PDF of the credit report during the quick qual stage. So it's as simple as just the 1003, the full tri-merge credit report, and then the bank statement is all we need initially to get started on a full quick qual review.
Yeah. And then Stace, Stuart's asking on top of what Steve was just talking about, the personal bank statements. What if they don't have a business, they can't supply 2 months of business bank statements? What expense factor would we do for personal bank statements?
So then we're going to default to the original 50%. If 50% works, we go with it. If not, we will need that expense ratio letter from the CPA or tax preparer to be able to use a bigger percentage of those deposits going into that personal account. Another thing to notice on the personal bank, when you're using personal bank statements, anyone that's on those statements does have to be on the loan. Reason being, I don't know whose deposits are whose, so I can't tell you yet, just they all belong to him. I can't prove that. So anybody on the personal bank statements would have to be on the loan. Just want to throw that out there with you guys.
Yeah, thank you, Stacy. Steve, talk about obviously U.S. citizen, talk about perm resident alien, and then talk about non-perm. Got a couple questions like that here.
So the program does apply obviously to U.S. citizens, permanent residents, green card holders, and non-permanent residents. It does not apply for foreign nationals or I-10, etc. So non-perm, perm, and U.S.
Well, Mildred, hopefully that answers your question. Looking at, oh, this is a good one from Mary. Stace, can business and personal, and we'll take that one step, can you combine multiple bank accounts? It's a good question.
So we cannot combine personal and business. It's one or the other. And like Steve mentioned earlier, maybe you supply us with the business ones first and we'll get those calculated. DTI is not working. Maybe it's due to his percentage of the business. So then we will try and me personally, what I do as an AE, I'll be like, okay, now send me the personal. I know he's got a business account, so I can use 100% of what's going in the personal statements. So let me try those and see if those work. So we can do that as AEs, like tell you, okay, it sounds like you've got stronger deposits going into this account. Let's try this first. That doesn't work. Then we can turn around and try the other set of bank statements. So that's using personal versus business. We can only use one or the other. Now, if they have multiple business accounts, maybe the wife has a business and the husband has a business, or maybe you have just one borrower, but they have multiple business accounts. Maybe they own a clothing store and they own it in 2 separate locations. So they have 2 separate business bank statements for each location. Yes, we can do that. So we can use multiple business bank statements as long as there's no commingling of funds between the 2 accounts.
Thanks, Stace. Appreciate that. So Steve, a couple other, sorry, trying to read these. So Steve, talk about the business questionnaire, because we have some questions about who orders the expense ratio. So talk about, we do have a business questionnaire and how that dictates a lot of what we're going to equate the expense ratio to be.
Sure. So the business questionnaire is a very, very short form that we would send you a link during the quick qual stage, and it may take the borrower 3 to 4 minutes to complete it. And it's basically just stating the business name, the website if there is one, the percentage of the ownership, and then it asks for just a brief description of the business, whether it's a full service restaurant or fast food or flooring installation. Then the owner would simply sign it, or the CPA, if he elects, can fill it out on behalf of the borrower. But it just gives us, as your AE, a brief overview of the business type in the industry, with confirming the ownership percentage, which is key. So when we calculate and finalize the income, we know if it's going to be 100% or 50% or whatever the percentage is.
Thank you, Steve. Stace, I've got Dan asking a question. I think this is a good time to kind of move towards the 1099 program, and then maybe talk a little bit about the P&L.
Yes, so we have a 1099 program. It's done the exact same way as a bank statement, as far as your score, as far as your max LTV being 90%, and even as far as the expense ratios that we just discussed. Even though they're 1099, we know that their expense ratio is going to be low, but we're still going to use the 50% default. You want to use less than 50%, we'll get the letter from the CPA or tax preparer. So why would you use, so the 1099, sorry, I'll back up. So the 1099 will use either a 1-year or a 2-year. Now with us, you do have to be 1099 with the same company, not just the same line of work, but the same company for the last 2 years. So if you're a realtor with Keller Williams, and then you switch to Coldwell Banker 12 months ago, that would not be a 1099 program we could work with. We would then tell you to, let's try the bank statement program. So you're 1099 with the same company for 2 years. We can use a 1-year or a 2-year 1099 plus the year to date. Now the year to date can be using their bank statements. So the bank statements would be what, January through, we're up to June now. So the year to date is going to be through either through the bank statements, the deposits coming from that 1099 company that 1099s them, or if it's a legit big company like a Keller Williams, they can give us a ledger that gives us the borrower's year-to-date income. So we're going to average that with either your 12-month 1099 or your 24-month 1099 to give you your income. So why would you use a 1099 versus a bank statement program? If you're using personal bank statements and there is a borrower on there that we don't want to put on the loan, maybe their credit score is too low, maybe they had a recent bankruptcy, whatever the case may be, we don't want that other borrower on the loan that's on the bank statement, and the main borrower is a 1099 employee, then we'd be looking at going the 1099 with that borrower route. I can give you a scenario that actually I'm working on right now. The borrower is a hairdresser. She's 1099, she rents a booth, she's a 1099 salon, in a salon, and they provided the 1099s. Great. Income DTI is really tight. We're like at 51, so I'm working with them about paying something off. And I said, well, why don't we look at using bank statements? Because then, and the bank statements, you got all your cash tips. So we got all the cash tips, the Venmos, the PayPals, the everything like that I was able to add in. It gave me $2,000 more a month in income to use the bank statements versus the 1099s, because again, I had all those cash deposits going in the bank statements. So again, work with your AE. We're going to find out the best scenario for your borrower. Every borrower has its own story. So we're going to figure out the best way to work to make sure that the loan works for them.
Yeah, and again, being upfront with your account executive and letting them know, everything up front. They're, like I mentioned a couple of times, they are going to position you and your borrower in the right place for that transaction. Steve, David's asking about gift funds. Good question.
Yes, gift funds are allowed. Borrower must have minimum of just 5% of his own funds and 6 months on the subject for his own for reserves. If it's an investment property, then he must have 10% of his own funds in a reserve. The rest could be a gift.
Yeah, Steve, I'm seeing, I'm sure you guys are, especially being in Florida, a lot of people with second homes and we're priced. They say, no, you said this, I think, a couple of weeks ago. We're priced really aggressively compared to agency rates, right?
Yeah, I beat out agency rates, even on, I know this isn't a deep dive into DSTR, but even on our DSTR loans, so no income loans, I'm priced better on my investment properties than conventional right now.
So Stace, while you're on a roll, talk about that P&L then, and then we'll probably go to our quick quote, and as long as any more questions are coming in, but talk about, let me get over there. Sorry, Stace.
We've got some really good questions on this webinar.
I know, yeah.
I think the best ones I've experienced so far.
Well, that's why 73% are on here, probably because they haven't done a bank statement loan in the last 12 months. And hopefully the information we're sharing is going to help you feel more confident in doing self-employed borrowers on bank statement loans or P&L or 1099. Go ahead, Stace.
Yeah, guys, they're really easy to do, and seriously, lean on your account executive. That's what we're here for. We've all had a lot of experience here at Angel Oak. We know our underwriters. We know their pinpoints or pain points. So, definitely lean on us. We don't get paid unless the loan closes too, so we're going to try and make it work as much as you are.
Yep.
So the P&L program is going to be a CPA or tax prepared P&L. So again, it's somebody that's been self-employed for 2 years. They do need to be self-employed for 2 years for this program. And they're going to have their CPA or tax prepare a P&L. Now the P&L does not have to be audited because those are super expensive. So they do have to prepare the P&L. And then what they're going to do is the borrower's going to also give us 2 months of business bank statements to support those gross receipts. So the deposits going into the 2 months of business bank statements, going to be the most recent 2 months. Those deposits going in need to support that P&L bottom line within a 15% tolerance. And as long as it does, that's the income that we use. We go down to a 640 mid score on that one. We do go up to 80%, where the 1099 and the bank statements, we go up to 90% LTV. The P&L is going to be going up to an 80% LTV.
Yeah, thanks. So I don't see any other questions. Let me see if, are you guys seeing any, I've seen a couple of them, I know Stacy talked about these transactions, Steve, cash out, right? And,
absolutely, yeah.
So I know
a lot of cash out.
Sorry, Steve, go ahead.
And to be honest, I don't think I've seen a full doc self-employed tax return show more income ever than bank statements or a P&L. They're always going to be less. So why would you not, even just start there?
Yeah, and I want to reiterate what Stacy said earlier. You're going to, it's 99.9% of the time, you're going to increase that borrower's purchasing power. It's not the W-2 people buying those luxury homes. It's that self-employed borrower buying luxury homes. Stace, talk about interest only, because that's become, and then maybe even roll into maybe the 2-1 buy down a little bit.
Yeah, so the interest only is a great option right now. The rates have been coming down. So 3-4 months ago, the interest only seemed to be really popular. It's a 40-year IO. So the first 10 years is going to be an interest-only payment. After 10 years, if they have not refied out of it, after 10 years, it'll automatically convert to a fixed rate after that. So they're going to pay the interest-only payment for the first 10 years. And that goes, the interest-only, we allow up to 85 LTV now. Yeah, up to 85 LTV with a minimum of a 680 score.
Great. Steve, what's our, you might have to look at your matrix, so I don't mean to, what's the highest LTV we'll do on a second home?
Second homes are going to be 85, I believe, is still the current. Yeah.
85.
It is?
85,
okay.
Yeah. 80, second home and an investment, 85.
Yeah, so we're seeing a lot of those. Like you said, I know Stacy talked about our DSCR, but I'm starting to see a lot of people going bank statements for second home and investment properties. So, you know.
And I'm just going to kind of plug one more program that, guys, it's along the bank statement route, because a lot of people got these really low interest rates on their first mortgages on these bank statement loans a couple years ago. We have a HELOC bank statement program now too. So if they don't want to touch their first, they're self-employed, we're going to do the bank statement program, calculate the bank statements just like a regular bank statement program. But now we offer a HELOC up to 85% CLTV on these bank statement loans too. So we have people that don't want to touch their first. That's another option that we'll throw out there too sometimes at you.
Yeah, so Steve, Teresa's asking, does the borrower need to have a prior relationship with that CPA?
No.
Yep.
It could be a recently hired or acquired CPA, accountant, tax preparer, or even third-party bookkeeping companies. As long as we could verify that their existence, it can't just be a neighbor who does it on the side. We're going to Google, we're going to see the letterhead from that third-party individual, but it could just be even a newly hired professional.
Yep. Larry's asking about modular homes. We don't do modular homes. Sorry, Larry. Stacy, I'll ask this question from David again. David's asking a lot of great questions. Is there a prepayment penalty on that interest only?
Oh, good question. So the interest only for any primary and second homes, there's no prepayment penalty, whether it's interest only or not interest only. There's no prepayment penalty on any of our owner occs or second homes. Our investment properties, yes, there is a standard 3-year prepay penalty. They can buy it down to a 2-year, a 1-year, or they can pay an upfront fee to buy it out completely. Or for a rate incentive, they can make it a 4-year or a 5-year. And again, that's only on investment properties.
Right. Thank you, Stacy. And then Steve, Mildred's asking just to confirm 6 months reserves.
6 months reserved on the subject property only.
And I think this is a good time to bring up, you know, having Stacy and Steve here and all our other account executives. Probably 25% of the loans we close here at Angel Oak don't meet our guidelines. So, and that's why it's extremely important to reach out to your account executive, because they're going to know, like, reserves are probably one of the biggest exceptions we get. Now, we won't go down to 0 reserves, but it depends on, you know, the overall structure of the deal. And Stacy, like I said, Stacy and Steve know where we're going to get exceptions. So just make sure, you know, again, it comes back to what Steve said, you know, really good 1003, and that tells the story of the borrower. So, all right, Steve, we're going to pivot here, Steve, and I'm going to go back to our homepage. And again, this is being recorded. A lot of great questions. If we don't get to all of your questions, we will have your account executive reach out to you. And again, this is recorded. We will send this out before end of day tomorrow. So, Steve, let's talk about, you know, let's talk about looking at rates. Let's talk about how to submit a pre-qual and how quick and easy it's really easy to use.
Absolutely terrific. So there's no credentials at all ever needed for pre-approvals, quick quals, rates, pricing, anything. So on the homepage of the website, John's on it now. You'll see non-QM quick quote. It's either there, also on the top right hand. There's 2 different sections. Click either one of them. non-QM quick quote. Beautiful. And then let's just put in a normal example. There's a $500,000 credit score. Let's do a 740, which is probably my average. Loan to value, let's do 80.
Oh, sorry.
Subject state, that's fine. Leave it at 75. That's fine. Subject state, we'll leave it. We'll do Florida. 0 times 30 housing history means no late on their current mortgages. Property type, leave it as a 1 unit, single family. We're going to do a purchase. Let's change the income to 12 months business bank statements, please.
Oh, I said, please, thank you.
Yeah, hey. Self-employed 2 years, that's fine. It's owner occupied. Most of these are already going to be default. So if there's no change, you just skip right over it. U.S. citizens, fine. And then you'll see at the bottom section, rates and programs. It'll tell you just we apply for 75, and it's telling us that we can go as high as 90. Now the rate listed there is at $699, but I always encourage everybody, please click that blue button to the right where it says view rates, and you're going to see many, many more options, including rate buy downs, lender credits. Lender credits with the minuses mean that us as the lender, Angel Oak, will be giving a credit back to the borrower upon closing to offset his closing costs, which also include the broker's origination. So my recommendation is if a borrower is shopping you and you need to get him a rate, just don't give him the one rate at $699. I would always provide several, maybe 3 or 4, so he or she can see the options. If they want a lower rate into the low sixes, do they want a par at $699? Do they want a higher rate where Angel Oak will give them $8,000, $9,000, $10,000 back at closing? So there's many, many options there.
So Steve, what are you seeing just from everyone's really sensitive. Are you seeing, like, we picked on borrower paid compensation. Where are you seeing the line right now these days is borrower paid versus lender paid?
I'm probably at 95, at least minimum, 95, maybe even 100% for the last several months borrower paid. It's a lot safer. You don't have to worry about the EPD. I always suggest doing the borrower paid and utilizing that lender credit to offset. Let's do an example. Let's just say the broker originator wants to charge 2 points, and the borrower maybe is lacking a little bit of assets and funds are tight, but doesn't really care about the interest rate because he's going to refi in a year or two. Then you can offer as high as you see there, 2 3/4, 2.375 back. But if you want to offer 2 back, the closest would be, let's just say 2 1/8 there. So at 7.875, we're giving him back, the borrower, 2 1/8 or $10,625 back. That'll wash the 2 points that you're charging completely. So in reality, he's not coming out of pocket at all paying your origination because we're giving him that amount equivalent back at closing. And that goes a long way. And I'm seeing a lot of lender credits. Probably 20, 30% of my files are including a lender credit.
Okay, that's good to know. Good to know. So Steve, we're not locking the rate here, right?
Repeat that?
Right, we're not locked. Just because we click on a rate here, we're not
Correct.
locked. Right.
Right. This is just the pre-approval stage, the quick qual stage. So it doesn't matter what you're going to select here. This is just for us as the AE to know how to qualify and calculate accurately DTI and ratios. So you can click on anything. You're not locked in. You can change it anytime, even during the whole underwrite process. So John clicked on one already, and now you're just going to hit select option, and that brings you to the start of the quick qual or the pre-approval stage. You have a MISMO, you can upload it there. Most folks just click the next button. It's much easier clicking the next, and it brings you to the next section where you'll enter from the drop downs your assigned account executive's name, then your company name, the loan officer name, the NMLS, phone number, etc., as you see fit. And then below that will be the few mandatory fields reflected with the red asterisk there. You have to upload the PDF of the application 1003, the credit report right below it. You don't have to have a 1008 if you don't want it, it's optional. And then below you'll see the bank statements. Sometimes if the capacity of the statements are too large, you can only upload a few, that's fine. You can always email the AE the remaining, but you'll just easily drop or drag and drop or search and find it on there. And then at the very bottom should be a button that you will see that will say submit, and then off it goes to the AE to calculate income and check through your trade lines and do all the work that we do behind the scenes for you.
So Steve, how long does it take to get a pre-qual back, specifically with bank statements?
So if you upload it sometime in the morning or early afternoon, it's as early as the same day. If it's late in the afternoon or evening, it may run to the next day, but I don't think I've ever had one greater than 24 hours. The majority are all same day.
Right. Yeah, it's and that's it. Like I said, like we've said since the beginning here, you know, basically Stacy, Steve, and all of our other account executives are basically doing a pre-underwrite. And if Stacy or Steve are really are slightly unsure about it, we have a help desk that we'll send it to. And that exception or that approval from that help desk, and this income calculated here, as Stacy mentioned earlier, follows that file all the way through to underwriting. So, Stace, anything to add here regarding pre-quals and what we call quick qual?
No, that's pretty much it. Send it over. We'll get it pre-qualified for you. If we have any questions, Steve and I are looking at the 1003, there's something missing, or we're not sure about something, then, you know, we'll pick up the phone and call you just to make the process more streamlined for you guys. Just make sure there's no hiccups when it gets to underwriting. A lot of times I'll see brokers put income in the 1003 when it's doing a bank statement loan. And I'll always pick up the phone or send them a quick email. Hey, don't forget, remove that income before you submit the file. Or like Steve said, if your LOS requires you to put something in, just put $1. Because if the underwriter sees lower income on the 1003 than what we calculate, they're going to have to go with that lower income that they're seeing on the 1003 because they're thinking that the borrower put that on there and that's their true income. So always just make sure, double check, make sure that you either just have $1 in there or that the income is left blank.
So Stace, let's talk about marketing. We've had a couple people ask, you know, I think someone was asking, how do you find these borrowers and how do I market to them? So let's show them the content. So
finding these type of borrowers, that's another great question, you guys. We do have we should probably just do a webinar on just how to find non-QM borrowers, because honestly, they're everywhere. When you walk out, I had an electrician here this morning. Well, there you go. He owns the company. Hairdressers, auto detailers, house cleaners. Like you walk out your front door, you're going to trip over a self-employed borrower. The guy mowing your yard, like the boat detailer, your pool, the guy that cleans your pools. And they're everywhere. Go to, you know, if you want to start marketing towards financial planners, they don't want the people taking the money out of their account. They would rather them send them your way. My financial planner actually sends me borrowers, divorce attorneys. Somebody's got to buy a new home. So hopefully it's the self-employed borrower. Somebody's got to refi, somebody's got to buy a new home. You might get 2 deals out of that one.
You know, and it's, you know, Stacy, you're 100% correct, right? You know, so let's log into the portal. I already brought up this here. This is where Steve said.
You need login credentials to get into this part of it, you guys. So if you don't have them, reach out to your AE. We'll get you set up with login credentials. You do need to log in to get to our marketing portal. This marketing information, this is all free for you guys. So it costs you $0. So it's our marketing department does a great job. So once you log in, across the top, you'll see a tab that says marketing portal. You'll click on that. And if you go to flyers, sometimes this takes a hot minute to download, but you click on which flyer you want. We have a bunch of them to choose from. We now have Spanish flyers as well. On the left side, you'll see where you can upload. And again, this takes a while to show up here, but in the interim, on the left-hand side, you'll see where you can upload your logo, your picture. Maybe you have a logo that you want to put on the right side of that. Maybe you want to co-brand it with a realtor and you want to put your realtor's logo on the left side. So you have 2 logos, a photo, and then all your information is going to go in there. Your name, your phone number, your address, which state you're licensed in if you want. And then we'll do the equal housing or the fair lending disclosure for you. If your company requires a certain disclosure, you can drag and drop it into that or cut and paste it into that disclosure box. And then once you hit enter, all that information goes over onto the flyer that you see. So this guy did his, Myron from Prime Lending did his. Now, the good thing is he did it one time on the left. So if you can see where John's cursor is, you can click on any of the flyers in there, and all of that information is pre-populated now to every single flyer we have. Print these flyers off, take them to open houses, take them to your realtor meetings, take them to coffee, wherever you're at, leave them with whoever you're marketing to, and it's free for you guys.
Yeah, Stace, I really, we on our homepage of our website, we say underserved borrowers, right? Because they're self-employed, or investors or asset qualifiers, stuff like that. But this is an underutilized, I will tell everyone on here, and this is where I get on my soapbox, this is such an underutilized portion of our website. And like Stacy says, it's free to you. And I promise if you really get yourself on a marketing campaign with non-QM products like bank statements and investors, you'll get business. So Stace, let's talk about some of the other stuff, pieces of information we have for marketing.
Yeah, so we have presentations for you guys. So we have realtor presentations, and feel free to call your AE. We will come out there and do these realtor presentations with you. We know that you might not be experts in this non-QM arena. We'll come out there as your partner and just present for you and present these non-QM loan programs that we have. That way, if they have any questions, we're right there to answer them for you. I had a broker that actually added more to these PowerPoint presentations of other programs that their company does. He did a 203K loan. He did a construction to perm loan. So he added his own flyers of programs that his company does to the end of my slideshow. So it was awesome because we went through the PowerPoint and I did all the non-QM stuff. And then once it got to the programs that his company did, he took over from there, and it was just a team effort. And again, we will do these with you via Zoom, via in person, if you guys are close. So let us do these for you. You also insert your logo and your information. So Angel Oak is not on any of these flyers, any of these PowerPoint presentations. It's all yours.
Yes, Stace, I think it's the most powerful presentation that an LO can do to their referral base. And we have it up here. I have a statistic on my wall. 9% of the loans we close at Angel Oak are for realtors. So I know 73% of you have not originated a bank statement loan, but I'll tell you, do the math. If you get 13 realtors in a room, the odds are you're probably going to get one of their loans. And as Stacy said, she goes in there. She doesn't say anything about Stacy Flanigan. She doesn't say anything about Angel Oak. She goes in there and says, I am just one of, and I'll use David's name here. He's asked, everyone's asked a lot of great questions, but I'll use David. David, I'm just one of David's investors. That's it. She doesn't say anything else about Angel Oak. So take advantage of it. I think it's, like I said, it's an underutilized presentation. So, and then Stacy, let's talk about social media.
Yeah, social media posts. These are just a quick, like, out of sight, out of mind. We got to remember that social media is it's the now, it's the future, it's never going away. So grab our social media posts, grab these, cut and paste them onto your social media platform, whichever one you may use. It's just to keep in front of your borrowers, in front of your prospects, in front of your clients, reminding them what you do. It doesn't give a whole lot of information as far as the program goes, but it's just a little, hey, let me qualify you off bank statements. If you're self-employed, let me look at your bank statements. I know you probably write so much off using your tax returns, but I can do a loan qualifying you off your bank statements, and then just cut and paste it and post it to your social media. It's so easy to do. I have a broker that religiously posts one of our social media posts every week. She posts something every week like clockwork, and it gets her business.
Yeah. Yeah, I know we're getting near the top of the hour, but you know, again, I would challenge everyone on this call to use any of the flyers, social media posts, or the realtor presentation, and take advantage of, you know, Stacy or Steve or any or other account executives you might work with to present on your behalf. And I'll tell you, it's very, very powerful versus going out there and just kind of saying the same thing everyone else is saying. But bring this content that's different and exciting, and will open up more doors for them. We had an AE here in Texas did a Google search. I'm going to talk about a different product right now. He Googled real estate investment clubs in the Dallas-Fort Worth area, and he stopped counting at 20. So you take that DSCR, you take the bank statement program to them, they're going to be interested. So again, take advantage of Steve and Stacy's ability to present on your behalf. Steve, anything else about marketing at all, or?
I seem to like to tell folks to take advantage of these relationships and your lead sources, and even open houses. I went to a few builder not open houses, a few builder new developments in the last couple of weeks just to see, and I was blown away by the dozens and dozens of traffic going through there. So if you have a relationship with a developer for the leads, whatever, then I would, or even open houses with realtors, I would advise printing these off and distributing them, or sitting in at realtors open houses, and market yourself to some of the self-employed folks going through there if you're going to target the bank statement.
Steve, anything else in closing?
Just peace of mind that we're here for you. All the AEs are thoroughly experienced, and we're here for you. If you've never done one or you don't know how to do it, we're going to hold your hand. It's really, really easy. And don't be afraid to ask questions, and we'll guide and steer you in the right direction.
Well said. Stacy?
Yeah, same thing. Don't be afraid of them. Even if you've never done one before, like Steve said, we're going to walk you through it from A to Z. And until the closing, we're gonna be there for you, because we want, number one, for the loan to close, and number two, to succeed and build a relationship with you guys and start doing a lot more business together in 2024.
Yeah, so like I said, this is recorded. We will get this out to you before end of day tomorrow. If there's some questions that we didn't ask that kind of get a little bit more detail, we'll have your account executive reach out to you. So on behalf of everyone here at Angel Oak, for those who have closed loans with us, thank you for your business. For the 73% that haven't, let us hold your hand and close loans for you and build your business through the rest of the year and into 2024. So on behalf of everyone here at Angel Oak, thank you, and hopefully everyone has a great rest of the day. Stacy, Steve, thank you for your time, your energy, and your expertise. So appreciate you guys. Everyone have a wonderful afternoon.
Thank you.